Welcome to today's Explainer. We've got a wildly chaotic May 24th, 2026 to break down right now. We're watching two absolutely massive macro forces colliding in real time, and honestly, they're driving the crypto markets into totally uncharted territory. On one side, we have this high-stakes political showdown in Washington, D.C., and on the other, a jaw-dropping revolution in AI computing costs out in Silicon Valley. Neither of these exists in a vacuum, you know? And understanding how they smash together is basically the whole game right now.
So, here's the big question we need to ask. What actually happens when a political crisis in Washington collides head-on with an AI revolution in Silicon Valley? Rather than just getting distracted by isolated headlines, we really need to dig into how this unprecedented collision is fundamentally rewiring the entire financial system. Like, how does a silicon chip breakthrough on the West Coast actually affect the digital wallet in your pocket? We're talking deep structural changes to monetary policy meeting absolute leaps in computational intelligence.
All right, Section 1, the political showdown. Are we looking at a reset at the Federal Reserve?
Let's start with this major political escalation. Donald Trump has publicly vowed to fire Fed Chair Jerome Powell if he refuses to resign. Now, staying completely neutral here, as analysts, we just have to look at the massive uncertainty this threat injects into the broader financial system. Markets, whether traditional equities or digital assets, are basically holding their collective breath right now. Investors are impartially weighing the real-world impact of a sudden leadership shakeup at the central bank. I mean, markets famously hate uncertainty, right?
And you can see that uncertainty playing out as a massive internal tug-of-war. On one side, you have what analysts call the Fed ceiling, basically the current high interest rate environment that's keeping Bitcoin heavily range-bound. But pulling fiercely in the exact opposite direction, the prospect of cheaper money. The speculation is that if a new, potentially more crypto-friendly replacement steps in at the Fed, we could see a massive influx of liquidity. So investors are caught right in the middle, holding the defensive line against inflation while also gearing up to potentially shatter resistance levels with newly printed capital.
Moving on to Section 2, the AI industrial complex, moving from the lab to global scale. While DC is caught up wrestling with monetary policy, the tech sector is literally not waiting around. They are executing this massive restructuring of the AI industrial complex, and it heavily relies on crypto infrastructure. Take a look at this. The Tether-backed Rumble and Northern Data merger has officially commenced. This isn't just some software partnership, it's a physical hardware revolution. They are taking former energy-intensive Bitcoin mining facilities and transitioning them into the actual backbone of global AI computing. It's the miner to AI pivot happening on a massive industrial scale. Now, to grasp why this infrastructure pivot is such a huge deal, you have to look at the main bottleneck in AI. Up until literally today, creating top-tier AI models required an astronomical amount of financial and computational resources. It was basically a rich man's game. It's like trying to build a commercial spaceship in your garage. The sheer cost actively slowed down independent development and kept all the power locked up with a few legacy tech giants.
But check out this cost efficiency breakthrough. It is an absolute game changer. Baidu just unveiled ERNIE 5.1, which is reportedly beating top global models while costing 94% less to build. Let that sink in. 94% less. This massive leap in perimeter efficiency completely crashes the barrier to entry for developers worldwide. Suddenly, the resources needed to train these highly capable models go from totally prohibitive to incredibly accessible, and that is going to trigger an absolute explosion in development.
Because it's now vastly cheaper to build these models, the agent economy is officially moving from the lab into the real world. We're talking about a decentralized digital economy where autonomous AI programs are actively trading, negotiating, and executing complex financial transactions on your behalf. But think about the plumbing they need. Traditional banking is way too slow and heavily regulated for autonomous software to use efficiently. These agents require instant, borderless, programmable money. Basically, they need blockchain rails.
Which brings us to Section 3, universal high income. Let's look at Elon Musk's economic proposal. With this agent economy rapidly taking over traditional human workflows, we're naturally seeing major cultural traction around new economic models to manage the workforce shift. Maintaining a neutral look at the data here, Elon Musk is responding to these massive AI advancements by advocating for a universal high income, or UHI model. But the crucial detail for us is the deployment. He's suggesting these checks should be distributed entirely via crypto-native rails. He argues that traditional banking systems simply cannot handle the global, instantaneous microdistributions that a worldwide UHI program would actually demand.
If you look at the step-by-step logic here, the industry's narrative is fundamentally pivoting right before our eyes. Step 1, AI transforms the global workforce. Step 2, concerns over inflation and job losses hit a peak. And Step 3, UHI is distributed via blockchain to handle economic redistribution. The crypto industry is actively shifting its whole identity away from just being about speculative, volatile token trading. It's positioning itself as the permanent, indispensable infrastructure for our new AI-driven economy.
All right, Section 4, the smart money moves. How are institutions reacting?
So how exactly is smart money navigating this crazy juxtaposition of DC political chaos and Silicon Valley's hyper-efficient AI boom? Well, financial author Robert Kiyosaki just made waves by officially naming Bitcoin among the safest investments for 2026. He argues that with global debt climbing at this unprecedented rate, traditional fiat-linked bonds are losing their safe haven status. We're witnessing a massive psychological shift here. Major investors are viewing decentralized, mathematically scarce digital assets as a much more durable safety net than government debt. And what's genuinely fascinating is the wild divergence in market psychology right now. Everyday retail investors are completely paralyzed, sitting on the sidelines in a state of extreme fear. But at the exact same time, XRP whale accumulation and XRP ETF inflows are hitting multi-month highs. Why is smart money buying heavily while retail is panicking? Analysts suggest this accumulation is prepping for a major breakout as Ripple expands into tokenized government debt markets. The whales see the underlying utility and are basically ignoring the short-term retail noise entirely.
Plus, the institutional momentum building up behind the scenes is just undeniable. The headliners for Consensus Miami 2026, the industry's biggest event of the year, were just confirmed. We've got Eric Trump, Michael Saylor, and Solana's Anatoly Yakovenko leading the charge. And their focus? The exact convergence we're unpacking today: sovereign Bitcoin reserves and the agent economy. These heavyweights are fully aligned, coming together to prepare for a tectonic shift in global finance.
That leads us to Section 5, Market Outlook. Let's talk about this technical reset and finding the true market mean.
Let's bring all these macro themes right down to street level. This setup maps perfectly to a political and technical reset. On the bearish side, the psychological drag is heavy. You've got DC political instability, retail extreme fear, and Fed leadership uncertainty keeping prices range-bound. But look at the bullish drivers beneath the surface. The potential for cheaper money, UHI crypto integration, massive XRP whale accumulation, and AI cost breakthroughs are building insane pressure. It's a market desperately searching for a catalyst to tip the scales.
So, what's the absolute key takeaway for today's market action? Analysts are watching closely to see if Bitcoin can turn its true market mean into a rock-solid, unshakable support level at exactly $78,500. This isn't just an arbitrary technical line, it's the critical baseline where long-term institutional accumulation perfectly balances out short-term speculative selling. Holding this specific line through all the political noise is absolutely crucial for establishing the next major leg up. Because if that floor holds, if Kiyosaki's safe haven endorsement and that surging whale activity can successfully counteract the political anxiety from Washington, this market remains totally on track to shatter resistance. We could be looking at a highly feasible $85,000 month-end target. And remember, breaking that ceiling wouldn't just be a victory for Bitcoin. It would act as a massive catalyst, flooding liquidity into the broader altcoin market and completely resetting the technical landscape. So it leaves us with this massive question to ponder. As the agent economy takes over and Washington restructures finance, are we finally witnessing the end of the speculative era? Are we watching crypto transition into the permanent, everyday infrastructure for our future? It's a crossroads that fundamentally challenges how we view money, computing, and government policy in the 21st century. That wraps up our explainer for today. Keep learning, stay focused on the macro data, and I'll catch you next time.